another daily recap. This is July 29, 2024, Monday, and this is day 67, and I'm gonna recap you. So let's start with the pre-session analysis, and I'll tell you why I didn't take any trades today. So let's start with the daily analysis. So the daily is actually the swing structure is actually bearish, and the internal structure is now bullish. It is playing actually the swing pullback. The price has formed. The price has reached the premium levels and it has made a bearish top. So what I look to see is continue. I expect this order flow to continue and then take out this daily weak swing. Remember there is a ton of low resistance liquidity still available for the price to just make a small pullback and then go up and to even take out the strong swing high. So what I'm currently expecting is in this current price action, I'm expecting this equal lows, equal highs to be taken, mitigate this daily supply, and then price to push down to take out some buy side, sell side liquidities below this POI. So once the price come down, it can mitigate this demand and then do whatever it wants. But for now, I'm expecting the price to go up and then come down. So swing is bearish, internal is bullish, fractal is also bearish. Price has formed equal highs as a source of liquidity and to mitigate the daily supply. I look to buy till the price reaches the daily supply and then I look to sell. So, but the bias keeps changing in the day. This is the 4-hour chart. So the swing structure is bullish and the internal structure is bearish. So this is the equilibrium of this internal range. So we can expect the price to go further up, tap into this 4-hour supply, and then the price can push down to take out this weak internal loop. So that was actually my plan. But this is a ton of low resistance liquidity, but the price need not push up higher. It can make a chalk and then take all these sell side liquidities. So swing is bullish, internal is bearish, swing pullback, the swing pullback phase, the price, yeah, one second. So this is the swing range and price has not yet reached the equilibrium of the swing range. So price can come down for three reasons. One is a ton of low resistance liquidity, a weak internal low, and once the price reaches the supply, it can come down to take out these low resistance liquidity. So for three reasons, I'm expecting the price to come down. So swing is bullish, internal is bearish, and price is in the swing pullback phase. Price did not mitigate the EQ of the swing range, thus the price has a potential to come further down to make a deeper pullback. Also to mention that there is a ton of sell side liquidity that can be rated today. So you wanted to target these sell side liquidities today. We'll look to take longs till the price reaches the 4-hour supply. Ideally, I'm expecting the price to reach the Q of the internal range. That's ideally, not expectation does not always meets reality. The price can just tap into this daily supply and then push down. So it's possible. So what will happen is what I'm expecting is price can tap into this daily supply. If I get some early signs like bearish order flow shift, I'll be happy to enter in this POI without the price reaching the 4-hour supply. This is H1. The swing structure is bearish. The internal structure is not clearly formed, but we can assume this is the internal strong low and weak high. Yeah, I mean the internal structure is bullish actually. This is weak high and strong low. And you can see there are ton of sell side liquidities here, but there are no POIs formed for this sell side liquidity to be traded and tap into the POI and then go up. Since there is no POI, what I'll be expecting is price to come down, sweep this liquidity, make a bullish chalk, and then a fresh POI will be formed, and I can trade from this POI to target the 4-hour supply. So swing is bearish, internal is bullish. I ton of sell side liquidity in the form of Asian lows, equal lows, but there is no POI. Thus, I need to wait for a bullish sweep zone to be formed before taking any position. I can look to trade the phase C longs and target the weak internal high, which also supports the high time frame narrative. So longs are phase C and shorts are uh, phase B. And the phase B shorts are low probability because price hasn't reached the EQ of this swing range. Okay, this is session update at 9:25. Price took the as expected. Price took all the sell side liquidity below. Now I'm waiting for the price to make a bullish chop to look for longs, but it's very risky because I'm expecting this strong low to hold, having a weak swing low behind. And also with this, huge falling knife, I'm expecting the price to reverse, which is against the price action, but still it can happen. I'll keep in mind that the price has taken out the price that the price can take out the weak swing low and create a new low high. So it's possible. So at 12:45, price made a bearish high boss, as I strongly feel that the low resistance liquidity will be raided and the daily demand will fail. This will be my low resistance liquidity and my drawn liquidity. That's I like to sell using medium time frame as my guide. So once the price took this week swing, I was expecting the phase E2 to continue till the price targets this daily low lower resistance liquidity. I mean, sorry, the 4-hour lower resistance liquidity. So I expected the price to be bearish. So to catch this move, this was the only POI left with the sweep of liquidity. So it's a good POI, price can respect this and then come down. So at 12:45, I identified this. We'll be looking for phase A2 shorts from the POI as it is formed through a sweep of liquidity. But I'm aware that this POI is not present in the premium prices of the swing range and can fail if the price wants to make a deeper pullback. So this could also be a POI. This uh, buy to sell order flow can also be a POI where the price can come up and then go down. But since we are having a clear draw on liquidity, price will not be moving that far. So it will, try to catch up with any POI in any supply zones on the way, fill some orders and then push down. So this could be a high probability area where the price can tap into and then come down. So this we come into the end of the session and the sell all the sell equities have been taken in the daily. So there is nothing left for us to, play shorts because all the such liquidities have been taken. And probably I'm expecting this order flow to continue and this order flow to be flipped, and then we can make a deeper pullback, or we can just get this demand and continue the, uh, you know, without making a deeper pullback, we can continue the uh, bearish order. Price to the H1 swing low, thus I'll be looking to play the A2 shorts as there is no significant HTF demand zones from which the price can do. Price has swept the high time frame sell liquidities, but since as per my rules, price needs to come up from a strong supply in strong demand to look for bullish pullback in the medium time frames. But since there is only a liquidity sweep of the high time frames, I'm not fully completely satisfied. But once if I see beautiful order flow forming, then I'll know okay the order flow is now bullish. Then I can look for longs to play the phase C longs. Okay, for now, there is no trades today because price didn't mitigate the necessary POI that I was expecting the price to mitigate. And also, price just trickled down, one single shot with only a small minor pullback. So there is nothing to trade today. Yeah, maybe tomorrow we can expect some trades. Let's see. Thank you guys. Bye. Yeah, hello and welcome to another daily recap. So this is July 29, 2024, Monday, and I'm going to recap gold versus dollar, and today there is a losing trade and the market faces phase B, and I didn't get complete wipeout. I just took my stops to further up. I'll tell you my risk management also, and I entered in the M15 time frame, and then session was New York session. So let me give my pre-session analysis and what I saw in the charts and how I took the trade and why it ended up in losing trade. The thing is, I just want to be transparent. I just don't want to cherry pick only the winning trades. I just want to post all my winning and the losing trades so that so that I'll benefit from seeing my own videos. What mistake I did, how I analyzed the market wrongly, what how I hesitated to take trades. So all those emotional variables, all those technical variables, all those psychological variables I'll be able to record in this video so that in future, when I see all the videos, monthly or weekly, I'll be able to note down the key areas that I need to work upon and improve upon them. So over the years, not only the money in trading compounds, also the skills also compounds year by year. Enough of chit chat. So let's jump to daily. So the swing structure is bullish and the price is coming to the discount prices. And there was this excess liquidity which I expected the price to take out. Why? Because actually this was a demand zone which the price uh, reacted to, but didn't complete the reaction. Actually, the role of the demand is to give a reaction and take out the high. But since it didn't take out the high, this low will be taken out. So this low is the drawn liquidity for me. So the price came down, but didn't take out the low. Again went up and tap into this area of supply. So this is a high time, high probability that the price will come down to take out this weak internal low as well as the drawn liquidity that I marked, a couple of days back. So swing is bullish, internal is bearish, fractal is bearish. And actually fractal is not yet formed. Price making swing pullback with a bearish order flow. Price now in the daily supply with equal lows to be taken out. So this is the equal low that has to be taken out. Thus, I'm expecting the supply to stay in control and target the sell side liquidities. This is the 4-hour chart. So the swing is bullish and the internal is actually bearish. So the swing is bullish, internal is bearish. The price is in the swing pullback phase, and the price has actually reached the equilibrium. And this is the 61.8 pip level. Price has also reached it. But still, since there is a daily drawn liquidity, I'm expecting the price to come down to make one more bearish leg down before making the run to external phase. So this is a zoomed in version. Same. Swing is bullish, internal is bullish, swing pullback phase. Price is in the daily supply. Thus, daily supply. Thus, it may or may not respect this demand as the price has already reached the 61.8 fib level. So since it has reached the optimal trade entry point, price can just flip this area of supply and then take out the strong internal high and then continue the bullish order flow. Or also I'm strongly expecting the price to be bearish today to take out this strong liquidity. The price can respect the supply, come down to take out this strong liquidity to make a deeper pullback. So anything can happen, guys. So this is H1. The swing structure is bullish and the internal structure is bearish. Yeah, internal structure is bearish and the price has reached the 50% of its internal range. So if I zoom in, yeah, here we go. So this is internal structure is bearish. This is strong internal high and weak internal that I'm going to target. So swing structure is bullish, internal is bearish, and yeah, this is internal of internal. I call this a small internal. So this itself looks like a swing structure. So because of this big swing range and big internal range, I usually mark small internal ranges within the large internal range. So this is a small internal range which is actually bullish. So what I expected is price to tap into this small, I mean this H1 demand and this small internal strong low to hold, and price can take out this big small internal high. Why? Because price can continue this bullish order flow to mitigate the 4-hour demand, to mitigate the 4-hour supply. And after which, the high time frame bias can kick in and then the price can go bearish. Remember what I said in daily? I am expecting the to play long till the price reaches the daily supply and then I'll be looking to sell the market. So the same exact thing that I'm going to do in the lower time frame. I'll be waiting for this Asian lows to be taken out, and once the Asian loss has been taken, I can directly jump into M15 and look for LC2s. So swing is bullish, internal is bearish, small internal is bullish. Uh, Price has reached the EQ of the swing range, thus price can start the run phase. I'm looking to go. I'm going to look for shorts to target the high time frame drawn liquidity and follow the bearish internal order flow. Thus, I also keep on the risk of being stopped out as the price has reached 61.8 fib level and can start the run phase anytime. So, also, there is a buying opportunity following the small internal order flow, targeting the weak small internal high. So, what I said, I'll wait for the Asian lows to be swept along with an LZ2A in the M15 to look for longs. So, let's see what the market did for me. So, session update at 9:25, price did make an LC2A. Price took Asian lows but did not make any LC2As. Thus, I look to enter using the double confirmation entry actually for this price action, or conservatively, I'll wait for the H1 shift to take longs. So that could be more conservative and it will save you from several losses. But also you can miss several trades because of you being more conservative. So one becomes, you to become safe and at the same time you become annoying when you lose trades. So if you need to accept the risk when you implement a particular strategy. And 1127 price mitigated the daily supply. Uh, but I was hesitating to take longs as there is no H1 bullish stock or LC2A. So, and also the H1 PY is very large. So waiting for the price to make a bullish stock and then I look to enter LC1. Or you can see if the price takes out this high, this would be the inducement. And if the price takes out this inducement, then I'll be looking to pay the LC2. Exactly, that's what happened actually. Price made a fake break. This become the inducement. So when the price took the inducement, I entered. So This long is called PSB longs. Since price has reached the 61.8% of the OTE, so PSB longs are valid. So in OTE, and there is a actually this box is not ticked. So you can see actually I was pushing the state to forcing the trade. There is no medium time frame chalk. Medium time frame didn't make a chalk. It just made an equal highs, but it didn't make any chalks. So that's one of the that's one of the human mistake, not a strategy mistake. So medium time frame chalk is not there, and the SMP divergence is also not there. And POI with only OTE, and this one was met. In front of SMP divergence, you can also include high time frame narrative. For me, high time frame narrative was there because I was expecting the price to go further up to mitigate the high time frame supplies. So you can tick one, two, three boxes are ticked, and one box is not ticked. That's more than sufficient for me to involve in the trade. And you can see the, these are the criteria of the POIs, and out of which five are fulfilled. So there is no second thought, just enter using LC2A model. And here are some risk factors. I just wrote down these risk factors after placing the trade. Before placing the trade, if I know these risk factors, I would have been, my defense mechanism in my brain would stop me from placing the trade. We are actually trading models, and we have both positive confluence and negative confluence. What my mind does is it will always give more bias to the negative confluences. So whenever there is two negative confluences, your defense mechanism kicks in, your fear of losing kicks in, and it will automatically prevent you from trading, and you will lose the edge. So what I'll do is I'll just place the trade, and I'll just write down the risk factors. What are the possible ways in which my stop loss can be stopped? Hit. So the first one is price has, this is the internal range, right? Price has already reached 61.8% of this internal range. So price can come down to take out this weak internal. So there is no mandatory, thing like price needs to go and tap into this high time frame POI. Since the price reaches 61.8% of the fib, it can come down to take out the weak internal. That's what I mentioned. Trading against a strong internal high, trading against the, and actually this is not true because high time frame suggested the price will come down strongly, but before that, I expected the price to go up. And also, there is this buy side liquidity, and after this one price didn't take out this high, it means all the liquidity above here are being swept, and there is no orders to be filled. So why should the price go above to, when there is no orders? Then there is no H1 top. So that's a major criteria. So all these combined, which can it could give me, a nerve which I would not trade with the model. And yeah, obviously I got stopped out. I think I didn't include that one. Yeah, actually I got stopped out. Just go yeah. I'll show you in the charts, no issues. Yeah, actually this is the inducement, and I took the trade here, LC2A. Price went up. It made the first break of structure on the upside. So my stop loss was here. I just pulled it up to here. That's why I lost $42, not $50. So it is what it is. Okay, yeah. End of the session, I got stopped out. I didn't take this screenshot. So I got stopped out during the New York session, and that's -1. So what is the end of the session update? Was expecting the bullish order flow to continue to reach the high time frame supply. Yeah, but the supply took over and made a strong bearish order profit. I'll be looking to play the shorts till the price reaches out, takes out the weak internal low. Now the price action is very clear. Now the intentions are very clear, and we know this will be the next target for the price. So I'll be looking to play shorts till the price reaches this point. So very simple. Okay, guys. See you tomorrow with another daily recap. Thank you for now. Bye, guys. Hello. This is July 29, 2024, and today I'm going to recap GU, and I didn't get any trades. This is my first day with GU, so it's a neutral start. Let's see how GU also contributes to my portfolio. Uh, this is a daily chart where we should have taken the full daily chart, but okay, daily is actually bullish and the internal is also bullish. So we can look to play the phase A2 longs as long as the price makes an high box, a bearish high box. So currently, if I see into this price action, the daily has made a chop, and there is a bearish order flow till this demand. So what I'm expecting is from the GU today was price to be bearish again, bearish again to mitigate this daily demand, and then it can shift bullish to target this peak internal low, in peak internal high. So this is 4-hour chart. The 4-hour is bullish and the internal is bearish. So this is the internal range that I'm currently dealing with, and this is equilibrium of that internal range. So what we can expect is price to move up to at least tap into this equilibrium point and then come down to mitigate this daily demand. So this is the H1 and the internal structure of the 4-hour time frame has become the swing structure of the H1. So this is the internal range of the 4-hour. When the internal EQ of 4-hour, this now became the swing EQ of the H1. So the swing structure is bearish and the internal is kind of bullish. So swing is bearish, internal is bullish. So it's swing pullback phase. Expecting the price to sweep to sell side liquidity and mitigate PPY. Okay. What I'm expecting is since it is phase C, so this is a ton of liquidity, a ton of buy side liquidity will be there, and obviously I'm expecting the price to mitigate this PPY before pushing down. So to do that, to fuel its move up, so we can expect the price to sweep some sell side liquidities and then make a fractal chalk and then go up. Or that was a conservative approach. We can also look for M15 LC2A and then we can look to take longs. I usually do with M15 LC2A because for me it's kind of tight range, so M15 LC2A will work out. So actually price mitigated this demand as expected. It swept the buy side liquidity, but I didn't enter directly because there was no LC2A. So I was waiting for LC2A, or otherwise, if there was an H1 bullish stock, that would be far better for me. But it didn't do anything, just rallied down and it made one more swing bearish was and mitigated the 4-hour demand. So after this one, I was expecting that for a bullish stock for me to trade the swing pullback, but no, there was no. I mean, there was no bullish stock, so I didn't take any trades. So this was the end of the session. The price test, there was no bullish stock actually, but there was a bullish order flow that was kicking in. So I thought of to leave the price as it is. So let the price go to this extreme supply, and once there is a shift in the order flow, I can look to take the phase B shorts or phase A shorts. If the price is consolidating in the middle, then I can look to take phase C longs, provided that there is sweep of some sell side liquidity and then push up. So that's the case for tomorrow. For now, there is no trades. So this will become my week swing low that can be targeted next time. Okay, guys. See you. See you tomorrow. Thank you, guys. Bye.